All right, good morning. Let's go over today's trade plan. So in the overnight session, we saw that 33 quarter that was mentioned in yesterday's recap ended up capping the upside, and ES balanced within a range. Buyers are in control, or at least they can maintain control above the 25 to 27 support. So not much has happened in the overnight session. We've simply been balancing within a range, and the bias heading into the open is relatively neutral because there really isn't any um, big economic catalyst early in the session that can drive price and sustain a directional move. Doesn't mean it can't happen, but there's no econ report or anything out that will tell us that it's very likely to happen. So at this point, that 31 quarter to 33 quarter resistance is very key on the upside, and even though buyers are maintaining control so far, we do need to see a break above that zone to confirm the strength on the buy side. And if we can get a break above the 31 quarter to 33 quarter zone, that would bring yesterday's high into play. And at that point, ideally, there's enough strength that we can take that out. And at that point, it would be like a short-term balance breakout, and we can head up to 37 to 39, and that's a good spot to take profit. And since buyers would be in firm control above 34.75, we could even go up and fill the gap at 1841 and not really get a decent sell response until the 1841 gap or the 41 half to 43 half zone. The top of the initial resistance zone, 39, 39 half, that area can also attract some sellers on first test, and that's why it's a good spot to take profit on the long side. But depending on how we approach it, if it's like a breakout type move, then it may be too quick to fade. Like, 39 is not going to be far enough to really justify shorting the market and within the context of a balanced breakout. So above pre-market resistance and above yesterday's high, we certainly want to be cautious on the short side. And in order to take a short above 34.75, we would have to see some very clear signs of weakness, either a very clear negative divergence on the advanced decline lines, a lack of momentum, the other markets perhaps not holding up or hitting their resistance levels, something along those lines. We'd have to see a lot of things setting up, supporting the short case, in order to short any of those zones. Otherwise, we'll use them more as profit targets and areas to exit our longs. Now, on the downside, this 25 to 27 area is pretty important short term, and we can see that, in the overnight session, we got some buyers ahead of that. And if we break that zone, then we can go down and fill the gap at 2075, right? We have that open gap down there. So that would bring the 1875 to 2075 initial support into play. And we can still get buyers towards the bottom of the balance, which is the initial support zone. We can still get a buy response there on first test if the move happens early in the session, and if it's more of a straight line type move into the bottom of that zone, or into the naked VPOC, then it could be used as a potential long setup and a fade trade. But if we balance above 25, all session and then break lower in the afternoon, then I would be cautious fading that move, because you will have built a lot of time and value above 25 to 27, and you'd be liquidating and breaking below that area. So at that point, you want to be cautious fading a liquidation type move in the afternoon, because you might just get a small rotation and then a continuation lower. So how the zone gets approached and when it gets approached is also important. And that's why the initial support zone early in the session, it's a spot where buyers can certainly enter ahead of the FOMC minutes, and continue balancing ES within the recent range, especially with the FOMC minutes being the primary catalyst today. But if it happens after the news and on strong volume and momentum, then we don't want to fade it. So the theme this morning early in the session is going to be about being very selective on the types of trades you take. And the reason being is that there really isn't any strong catalyst telling us that we're going to get a big directional move. Again, if the signs are there in real time in the price action, we start seeing some strong tick readings and some strong bars that are showing us that there's some directional conviction, or if NQ breaks above the overnight high and above 58, that would tell us that no, perhaps this could go up to 39 ahead of the afternoon session, and in that case we'll try to jump on board, but we don't want to take any aggressive trades if the momentum is kind of neutral, right? Like a positive 5,600 tick reading followed by a minus 5,600 tick reading. That type of environment is indicative of more of a balanced market. And, if volume stays relatively light, around 70% or something, right now we're running around 75, 80%. So if volume doesn't pick up and, momentum is kind of neutral, in that case, you don't want to necessarily take any aggressive entries expecting continuation, because it might just stall, kind of rotate back down 2-3 points, which could very well hit your stop, and then it just bounces in a range, and it can be a frustrating environment to trade. So today the opportunity is not as good as it was yesterday, right? And it's all about being active and aggressive when the opportunity is there, and then holding back a bit and being more passive and cautious when it doesn't seem like the opportunity is quite ideal. Now, we're going to be reading it in real time and adjusting, but at least heading into the morning, that's the way the context is set up. Our bias is neutral to bullish at the moment. Bigger picture, we're still bullish. Buyers are in control, bigger picture, and we're balancing within a range. And, right now we're balancing in the upper part of even this short-term range, so we are leaning more towards the buy side still. We would still rather take long setups rather than take any aggressive short setups. And if we're shorting the market, then we just have to see a little bit more, and it has to provide us with good trade location. So, those are ideas heading into the open. Let's see how well we hold up off the open, and we will take it from there.